Good morning, everybody, and welcome to the weekly analysis session for Monday, 1st of February 2016. Our disclaimer, first and foremost, the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation or particular needs. So, as always, before making an investing decision based on the general advice presented in any of the presentations we do, please consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. Well, let's get underway. The agenda, a couple of things just to make mention of along the way. Sent out last week a new watch list. Now, the watch list in its current format is going to be progressively upgraded over the next, probably the next fortnight, just adding a few little improvements to it along the way. One of the aspects that I'm keen to get put into the watch list is a record of all the closed trades, so you can see how the methodology is performing over the longer term, and so part of that will have the resulting the results of each of the trades. So both in terms of a percentage return, but also in terms of an R return. So again, when we're talking about expectancy, we measure that in R multiples, if you like. So I'll be getting that added into it as well. And also for open trades, adding a column that just says how much we're up in the trade for those trades that we're up or down as a work in progress, if you like. So when you're looking at the spreadsheet, you can have a look at which trades are up based purely just on a percentage change from entry level, whether that's in the positive or in the negative as well. So that's just a little bit of a reminder about that. So the other aspect of the watch list, to give it the best functionality possible, when you're using the watch list, we're creating it in such a way that once you've downloaded it, that you'll actually be able to make changes to it. The previous watch list you really couldn't because it was all locked down. This one, if you enter on a cell and change any of the contents, etc., it'll be a fully working spreadsheet. So once you download it, you'll be able to change it and amend it and do all sorts of things like that. So you just need to keep that in mind. If you happen to change it and muck it up, well, you can always just go back to the website and download another version of it. Okay, let's today, obviously the portfolio management, we're going to have a bit of a look through. Benchmark indices and specific setups, and a little bit of Q&A at the same time. Over this last week, the ASX 200, we still remain in extreme risk, so again, just being mindful of that at present. On Friday afternoon, we had the Bank of Japan making a bit of an announcement there that they were going to start introducing negative interest rates. Jeff and I spent a fair bit of time talking about that, as well as some sector analysis on the Friday afternoon. But the important thing there, the central bank, they're now charging any of the big institutions, if they're going to park their money there, that they're going to be charged for it. As a result, the theme behind that is to try and get them to, if you like, extend their finances to businesses, etc., in the hope of stimulating some of the economy there as well. So as a result of that, the US had a fairly sizable bounce over the course of the weekend. It's currently still in very high risk mode at the moment, and we'll just have to wait and see what the full extent of that bounce is. So just be mindful of that as we're progressing along the way. Now, getting back to our portfolio management, it is important that we continually think about this. Obviously, it's a little bit like driving a car. When the road conditions deteriorate, we need to be mindful of that and driving appropriately, and that just means allocating a sensible amount of capital based on the current market risk conditions. Now, assuming you have a total or maximum allowable drawdown of 15% and you're splitting your portfolio across both US and Australia, that would mean that on the Australian part, you would be allowed to allocate a maximum of 7.5% of capital as value at risk in the market. Because we are in extreme market risk conditions, that means we use a market risk multiplier of 10%. So 10% of that 7.5% is not 0.8, that's rounded up, is 0.75% value at risk for the Australian market. In the US, as I mentioned, we're in very high market risk mode there. We did improve slightly from extreme. The other 7.5% of your capital that you can allocate as value at risk in the US, at the moment we apply a 20% market risk multiplier to that, and that lets us have a value at risk at 1.5%. Right, importantly, just a reminder about the macroeconomics analysis session on Friday. Jeff and I spent a fair bit of time also looking at Australian sectors. There's around about 8 or 9 of those, and we went through those and had a bit of a look where they're currently at the moment, which sectors are actually performing best. And one of the things you'll find is that a lot of the stocks that happen to come up on your scans tend to be those that are in stocks that certainly are outperforming, and a lot of those tend to come from those sectors that are performing, or at least performing better than the index as well. But interesting bit of background about there, and Jeff providing some good fundamental background as well as to what's happening in each of those sectors. Well, let's go through and have a look at Beyond Charts now. Our market risk profile first, the XJO, the ASX 200. There you'll see that again. The longer term moving average there really acting as dynamic resistance at this point. You might recall from previous weeks that wouldn't be surprised to see the market come back up and test these levels again. What the impetus was going to be for that, never too sure. Obviously, with the move with the Bank of Japan, then providing some potential further upside for our market. So be interesting to see what happens. Should we get up to this particular area, whether that's an area where the bigger players choose to release some of their stocks back into the market, or whether they continue to hold and add to portfolios, and therefore see the index moving higher from that point or not. But for the time being, we're still in extreme market risk. Conversely, we go across to the US here, and again, you'll see just in the bottom here, certainly our volatility really picked up, and that's pretty evident as well. Anyone who's a direct investor holding stocks, etc., in the US would be pretty much aware of that. For those people who not invested in the US and don't have a direct interest in investing themselves, may not necessarily be aware of what's been happening in the US with all this volatility, upwards and downwards movement. You'll see last week, big candle on Friday there, moving strongly to the upside on the back of that Bank of Japan announcement. So again, the question is, how far can this upward move extend to? And previous levels of what were once points of supply, points of demand, whether this is going to become a point of supply into the future, we'll just, time will tell. We'll just have to wait and see what's going to happen. Should the market move back at those particular levels, or are we going to bounce up to this level and turn around and come back down? Again, we'll just have to wait and see. But for the time being, thinking about the amount of capital that we've got invested in the markets for the time being. All right, so let's go through and have a look at the ASX to start with. So we'll go through and have a look at the new setups in the Australian market. So these are pendings as they stay at the moment. The first one was PLS. This is one from last week, and you'll remember that it's got a fairly wide stop on this. But last week showing a fairly strong candle, gapping up and remaining at that higher level. So that's certainly on its way towards the trigger level, a little bit higher ahead. Certainly based on volatility, it's a fairly wide sort of stop, so you just need to make sure that your position sizing on that one is in alignment with that. That was PLS, so that wasn't a new setup per se for this week. CSL are very close to triggering last week. We had to wait to get to 108.81, and very close. We got up to 108.68, so not quite there before coming off the highs for the week there. So that's still pending, the price action. There's been no change in that. Caltex is a new setup for this particular week. Caltex is quite surprising, obviously in the energy sector there, holding up really, really well. All we've got to do at this point in time is pass this old long-term peak. So we've already had our first test of that long-term peak. Now remember, a first test, what is a first test? Well, a first test is when price action needs to come within at least 1% of that particular figure, and that certainly has on this last move upwards. It's had a nice retracement, shallow retracement, and now last week's candle with a higher high and a higher low, meaning that we're now in a short-term uptrend. So that's what we're looking for, all our trends to be in the same direction. And we just need to break this last long-term peak. Well, let's just zoom out and see where we are historically to see if there's any overhead resistance, and there is none. So certainly been performing very, very strongly. You'll see relative strength, particularly over the longer and medium term, being outperforming the market for a significant period of time. A little bit of a pullback through here, and therefore seeing a little bit of relative weakness just on a shorter term time frame, but more recently really starting to pick up through here and improving on the short term relative strength as well. So the structure of the order this time around for Caltex is on stop at 39.07 with a stop loss that needs to be at least 2 ATRs below that entry level and at least 0.5% below that last medium-term trough. That last medium-term trough you can see coming in well above the second from last medium-term peak, second from last, so exhibiting very strong price action as well. And our stop loss coming in on that one at $34.84. That's Caltex. The next one on the list, thank you very much, Beyond Charts, performing nicely this morning. MYX, Main Pharma Group. Let's just zoom out quickly on this one just to see where we are. Again, all-time highs, so certainly something must be going on behind the scenes with this particular stock, given what the rest of our market has been doing. And you can see that clearly exhibited through the improving relative strength on all three time frames. These old points of supply through here now starting to act as points of demand. Last week's candle being quite a nice strong candle. Price coming back over the previous few weeks with market weakness, but improving last week. So really at this stage, all we need to do is break that last medium-term peak to have our order triggered. Price action, last trough, well clear of second from last medium-term peak. The structure for this trade on stop, 0.5% above this last medium-term peak. So it sees a non-stop order at $1.47. Our protective stop, our stop loss coming in at $1.16, which is 0.5% below that last medium-term trough, and it's also outside of 2 ATRs. That's MYX, Main Pharma Group. VTG, Vita Group. This is one that's been in Jeff Saffer's Elite Investors Club for quite a period of time. Vita Group, they, I think this is from off the top of my head, I think Vita Group have something to do with the mobile phone part of the market. I'll have to confirm that, but it's certainly been one that Jeff's been in for quite a period of time. Technically, it sort of hasn't been the perfect setup for us to enter it on that basis until now. And this last trough that's been just formed over the course of last week with this last week's candle, a higher high and a higher low, producing this last medium-term trough. Now that trough is well clear of the second from last medium-term peak down here. So exhibiting strong price action, market not waiting for price to come back to these previous levels. Importantly, this old peak through here, which is pretty close to a long-term peak in that we almost had lower peaks. We certainly got lower peaks, but we didn't quite get lower troughs. But from that point of view, it really did cause the stock to pause and go sideways, having broken through, coming back, retesting this old point of supply at the same time. So price action is looking really good. In terms of where are we, blue sky, and again, just looking at that, you can see the relative strength for quite a number of years now as well. So one of those stocks that has really held up quite well, particularly given what our market's done over this, particularly over the last 6 to 9 months, moving along quite nicely. So the structure for this trade, we need to enter 0.5% above that last medium-term peak. So we have a non-stop order there at $2.70, and our stop loss coming in at $2.15. $2.15 being at least 2 ATRs away from our entry level and at least 0.5% below that last medium term trough. That's VTG. I think that may well be the last one on the list. Kay, you had AGL. Let's go and have a look at AGL. AGL. Okay, so I'll just put on my overlay and have a bit of a look. First of all, let's zoom out and see where we are. Okay, so all-time high, so that's fine. And let's go through and have a little bit of a look. Certainly last week's candle, we didn't have our short-term uptrend. Certainly, if we think about this, we've now got a higher high and a higher low, so we're in short-term uptrend. So that's ticked the box in terms of making sure that all our trends are in alignment. Good relative strength, Kay, absolutely no problem with that. Last trough, certainly as far as the eye is concerned, that last trough coming in well clear of that second from last medium-term peak. So that's, in terms of price action, that meets the fits the bill. We did the zoom out. We're clear of that last significant long-term peak. Again, this is in the utility sector, and going through on Friday, talking through with Jeff some of the sectors that have been, holding up quite well, and the utility sector is one of those sectors. So certainly fits the bill. AOK certainly K. So if we're going to structure a trade on this particular one, even though we have surpassed that last medium-term peak, the question is sort of how far do we let it go? Well, as long as you can still structure a trade accordingly, and we've still got the right sort of price action, then there's absolutely nothing the matter with going ahead and taking a trade like this. All you really want to be doing is just making sure that you're placing an on-stop order at least just that 0.5% above that last candle, just so that we're giving a little bit of leeway. We're wanting further confirmation to go through. So let's go through and pop that one in anyway and see what it is. It's always good practice. So the high there is 1874. So what I'll do is I'll go and get my calculator out here. 1874. And we multiply that by 1.005, and that will give us 0.5% above that level. So that'll come in at 1883. So I'll just go up and put my annotation on there. On stop at $18.83. Now at the same time, I need to think about where I'm going to put my protective stop, and that needs to be at least 2 ATRs below that level. So that's going to be $1.50 or $1.51. We'll round that up. So 1883 less $1.50. So a protective stop based on volatility needs to come in somewhere below 1733. Now 1733, where's that in relation to that last medium-term trough? You'll see that last medium-term trough, the low there is 1728. So we have to make sure that we're at least below that level, at least 0.5% below that level. So rather than using 1733, we're going to go down to 1728. And we're going to multiply by 0.995, which will give us 0.5% below that level. So that comes in at 1719. So we'll put that in there as a stop loss at 1719. So we've got that information in there. Now all I'll do, for those of you wanting to set up your own analyses, etc., just going through that process now. So just typing in 1883. I'll change the color of that. We'll make it blue. And we'll change the color of our stop loss and make it red. It's on 1719 at the moment, so that was a good bit of manipulation there, David. Right, so I've got all that edited on or annotated on the chart there. I'll take that value line off, so I'll delete that, and then what I'll do is I'll create an analysis out of that. So down the bottom here, we've got all our different icons, etc. I just need to hover over the one that says analysis there, click on new, and then Beyond Charts will bring up a new analysis. And then what I want to do with that is I want to save that analysis as the default. So now that it's come up with new analysis, if I right click on that and set that as default, then what will happen every time I type in AGL, it will bring up the annotations, everything that I've done on here, the analysis for me. So that's a good way of saving that. So hopefully those of you who haven't quite upskilled with your Beyond Charts, that's a simple little tutorial to go through there. So hopefully that's helped along the way. So I'll put that in the watch list as well, AGL. Any others for Australia before we go through and check the rest of the portfolio? There was one stop out last week, so we'll go through and have a look at that one. That was BLA, which was Blue Sky. So I'll go through and have a look why that was a stop out. So you'll see once we got triggered in on this particular stock, price went up. We got to a little bit over 1-to-1 before the price volume volatility signal went off. Since then, price retracing, really coming back pretty hard last week. During that upward movement, it was sufficient to drag our trailing stop upwards. So the 3 ATR, prices come back, obviously 3 ATRs against us. And in the current market environment, that's certainly, you need to pay attention to that. So last week, closing below that trailing stop. So that's a market exit this morning on BLA. So that was the only stop out from the portfolio last week. There were a number of trailed stops. CKF was one that's been performing really, really strongly. And we've had a couple of entries on this one. I'll just add in there. This is the most recent entry. So again, we've had 2 entries. I haven't got them on the annotated on the one chart. I've kept them separate at the moment. But on the last entry and also the existing entry, you'll see that trailing 3 ATR line moving up higher again last week, gapping up and staying high as well. So again, really good relative strength, and that's moving in the right direction. So that's the second entry on CKF, and you can see that from the first entry way back down at 359, stock performing really nicely and well above the $5 level. So hopefully some of you have managed to jump onto that one. Domino's DMP was another one from last week. Now, just want to check, this was also last week, it was a pending as well. The on-stop order there was 60.88, and you'll see there that the high is 60.94. So that's triggered again. So that's the second time that Domino's has triggered, and at the same time with that gap up and the holding above that level, you'll see that that's dragged the trailing 3 ATR up at the same time. So that's Domino's Pizza, and again performing really, really well. VOC was another one in the portfolio that has also trailed its stop up. Really strong candle last week, so moving along really very, very nicely, and certainly one that's really respected its trailing 3 ATR all the way along is Vocus, so moving very nicely. Right, let's go across to the US now, and we'll go through and have a look at the new setups in the US. BWXT is a new setup in the US. If we go and zoom out, you'll see that it has not a huge history, but certainly in more recent times starting to outperform. Had underperformed for a period of time, obviously through 2012 and 13. Underperformance, even though it was sort of moving in a general sort of upwards type of direction, not nearly as strongly as the broader market. And more recent times, as the US market has started to struggle a little bit, it's certainly started to pick up and move in the right direction. So therefore, the relative strength coming through. Last trough, which is now formed by virtue of last week's candle with a high and a higher low. So therefore, putting in that last medium-term trough. That last medium-term trough well clear of that second from last medium-term peak. We just need to break through our last medium-term peak there. So a non-stop order 0.5% above that level. We'll see a non-stop order at $32.60. Protective stop at 27.04 cents, and that's 0.5% below that last medium-term trough. A little bit further away than 2 ATRs. but does still constitute a valid setup. So that's BWXT. Next one in the US, CUBE, and you'll see a couple of lines on here, and the reason why there are so many lines is that there's a previous setup as well. So you might remember a little while ago we had a setup, and I think it was on this through here where this trough was at or above this second from last medium term peak. So since then we got pinged in, price came back, didn't affect our initial 2 ATR base stop. Since then, price has moved up very strongly. A lot of nice white candles, good relative strength. Price has come back over the last couple of weeks. Last week putting in a higher high and a higher low. So therefore, another new medium-term trough being formed. That trough well clear of the second from last medium-term peak. So price structure on this very, very good. And if we zoom out, just to do all the right things, you'll see that we are in blue sky territory. So on the basis of that, you'll see that we now have an on-stop order coming in at 32.03. That's 0.5% above that last medium-term peak. Our protective stop coming in at 29.11, and that's 0.5% also below that last medium-term trough and outside of 2 ATRs. So more than 2 ATRs away from our entry level. So that's CUBE. Another pending order for the US. Another one, EDU. Let's just zoom out and see where we are on this one. So you'll see long-term peak through here in around about March of 2014. So a couple of years ago nearly now. It's taken a little while since that particular level. So whatever it was, think about it. It's turned this significant uptrend, smacked it on the head and turned it into a fairly significant downtrend, and it took a couple of years for it to recover. It's since done all the hard work. It's come back up. It's had a test of this previous major point of supply, so that's significant in itself. It's retraced along the way there, even gapping down at one stage a few weeks ago. Since then, turning around and moving up very strongly as well, and again you can see that in the relative strength really increasing over previous periods at the same time. So in terms of price action, well, look at that last trough, well clear of second from last medium-term peaks along the way. There is a long-term peak through here. Remember, a long-term peak is also highest point between medium-term uptrend and medium-term downtrend. It's past that level. It's come back. It's actually retested that old previous level, and now just looking to break out past this old major point of supply, having had that first test. So if it happens to do that, then we're in blue sky thereafter. So on stop at 33.72, protective stop coming in at $27.26. That's 0.5% below that last medium-term trough, and also in excess of 2 ATRs away from our entry point. That's EDU. Next one, EXR. This one may be familiar to some of you already, given that we already have a prior entry on this one. Initial order we had all the way back down at 79.17. Not too sure whether any of you have managed to get into this particular stock along the way. Hopefully some of you have, as it's moving its way up towards the $100 level as we speak. Last week's candle, we just zoom in. We are at all-time highs. Last week's candle, higher high, higher low. So short-term uptrend recommencing again. At the same time, confirming that last medium-term trough, and that medium-term trough clear of that second from last medium-term peak. So ticking all the boxes in terms of our price action filter, looking nice and strong. Nice gradual continual movement to the upside, good relative strength. It's looking good. On stop order, $92.45, and protective stop coming in at $83.14. That's EXR. Next one on the list, HRL, and you'll see multiple lines drawn on this chart as well. So just another setup. So the initial setup was way back down at 69.59. Not too sure whether any of you managed to get into the HRL. Hopefully some of you have, and have been able to stick to your trading plan and stick with it all the way through as it continues to move upwards, and again exhibiting very good relative strength. So last week's candle, really strong candle, finishing right on its highs there, looking very, very good. At the same time, forming that new medium-term trough, well clear of the second from last medium-term peak. Our on-stop order on this one comes in at $81.18. That's 0.5% above that last medium-term peak. Protective stop coming in at $73.37. That's 0.5% below that last medium-term trough. And it's outside of 2 ATRs as well. That's HRL. That's just another entry on that particular stock. Interesting, isn't it, that those we've seen a number of stocks there now that that have been part of the watch list for a while and seeing continued setups. So again, it just goes to show the importance of relative strength, and that behind relative strength over a period of time, it's really just tracking money flow, and money flowing into those particular stocks is being placed, if you like, on the basis of fundamentals. So it's really the fundamentals that are coming through on the chart, painting a picture for us. Smith Wesson, I think Dirty Harry knows a little bit about these guys here. Certainly, it's this in this particular instance, stock's still got a long way to go before we get up to triggering this particular price point up the top here. If we think about the price action, last trough coming in at or above that second from last medium-term peak. We'll just zoom out and see where we are. We're at all-time highs. Obviously, the Americans love their guns. I've heard a funny story on the weekend that friends who went to Vegas, they went down to to buy some tickets to one of the shows, and they were asked for ID, photo ID, and they got told that it was against the law not to have photo ID in the state of Nevada. And we laughed how it was against the law not to have photo ID, but it was okay to carry a gun. So, the Americans, funny bunch. On-stop order for this one, SWHC, Smith Wesson Holding Corp. On-stop order at $26.67, and a stop loss at $19.08. Fairly wide stop on that, and again, that's just based on volatility. So it's still got a fair bit of work. Obviously, a bit of supply up here with this pin bar, but certainly, you can go through and have a look at a lot of charts yourself. When these pin bar levels, the highs of those, once price gets back up to those levels and closes, you can actually get a significant move to the upward side as the market realises that perhaps it was a little bit hasty to be selling out of this stock when perhaps at the behind all of this, the fundamentals are actually pretty strong. So a bit of thought there as to what happens with those pin bars once that price action is broken. TSN, Tyson Foods Inc. Let's just zoom out and see where we are. All-time highs. So whilst not exactly sure what Tyson Foods does, but obviously with foods in it, there's the other thing that the Americans like as well is their tucker. You'll see last week's candle nice and strong. So by virtue of that, creating a new medium-term trough. Medium-term trough well clear of that second from last medium-term peak. So price action very, very, very strong. Good relative strength. We've just got to wait for a break of this last medium-term peak. To do that, we need to place an on-stop order at $54.69 and a stop loss below that last medium-term trough outside of 2 ATRs. So just as an example there, 2 ATRs based on that last candle there is $5.07. So we need to be at least $5.07 away from our entry level, but at the same time, we also need to be below that last medium-term trough. That last medium-term trough is important. All your troughs are important because they are points of demand, which should act as points of demand in the future. So hiding behind those is also going to provide that added bit of protection. So not just taking into account volatility for the placement of our stops, but also price action as well. So that's TSN, on stop 54.69, stop loss 48.27. I think that was it for the pending trades. Let's have a look. Okay, PNY. Let's go through and have a look. PNY, natural gas company. Let's go through. Check out PNY. Big gap up there, absolutely. Very... it's gone from $43 up to $57. I dare say there's probably some sort of takeover opportunity or something or other on that. Let's go through and have a bit of a look there. Absolutely, price action. Well, look at that. That last trough well clear of any old points of supply down here. Old points of supply really meaning any old medium-term peaks. Where is this in relation to everything? Well, it's way above anything. So all-time highs. Not too sure why that didn't come up on the scans there, Kay, but it certainly does meet all the criteria. Just not too sure about what that big gap is through there. I'm just going to leave that one for the moment, but certainly in terms of price action, it does. It fits. It meets all the criteria. So Kay says, was a takeover still okay to trade? Well, assuming that the takeover's gone through the price action, there's absolutely nothing to say that you couldn't trade this. Always a little bit wary of these sorts of gaps, etc. But obviously, market really liking it over the last little while. Natural gas, energy sector, those sorts of things. Not too sure what's happening with all of that one at this point in time. I won't put it in the watch list for the time being. I might just do a little bit more research on that one just to see what's behind that. Came up on your scan, Kay. Okay, interesting. Not too sure why it didn't come up on mine. We may be scanning a different universe. The universe that I typically scan is, I'll show you exactly what it is. So I'll go down to my scan profile. And you'll see I've got lots and lots of different scans in here which I've made, but this is the one that I typically use, the US weekly plus short-term uptrend. So if I go through to that one there and have a look at the securities, this is the list that I typically scan from. So it's the Saxo Capital Markets US shares list. Even though it does say CFDs, I'm just using that as a watch list to use. And that has stocks from a number of different indices across the board as well. But there's a couple of thousand stocks in that particular watch list. Okay, so a couple of stop outs last week that I just want to draw your attention to. So we'll just go through and have a look at those. LANC was a stop out from last week. And you'll see big dirty black candle there. Had managed to drag its trailing 3 ATR up. Price closing below that particular level. So again, that means a market exit tonight. So whatever price the market opens at, that means an exit on that one, LANC. A couple of stocks that triggered from last week. WTR, which was the Aqua America. I'll just go through and have a look at that one. Nice candle there at the end of the week, closing on its highs and triggering into that particular order. Trailed stops on the following: COR, Coresight Realty. Again, last couple of weeks, price action being really, very, very strong and dragging that 3 ATR line up as well. So looking really very good. WDFC. Old WD-40. Not too many things that you can't use WD-40 for, and continuing to move up nice and strongly. Last week's candle, nice big white candle, and doing some heavy lifting for us and dragging that trailing 3 ATR up as well. PSA, Public Storage. So we've got a couple of stocks that are in that storage industry, if you like, performing well. Last week's candle, closing, it's the highest close that we've had for a period of time, and as a result, dragging that 3 ATR line upwards as well. And old McDonald's, you'll see, had earnings, etc. last week, and gapping up and staying up nice and high, and really dragging that trailing 3 ATR up as well. So they were the trailed stops. We've gone through the stop outs, the new setups in both Australia and the US. All right, any questions, any observations, any feedback that you'd like to discuss? Nothing for the time being by the looks of it. All right, very good. Well, look, hopefully our market can get a bit of a shot in the arm this particular week on the back of overseas movements. Wide stops on many of the setups. Yeah, that's natural, David. Again, that's just attributed to volatility. So it's just something you need to be mindful of. With stop placement, the volatility we have in the markets these days, and you can look at this historically as well. On many charts, you'll see that the ATR, the average true range on many stocks, is just becoming significantly bigger and bigger and bigger, and by virtue of that, any pullbacks and things that we have along the way are bigger as well, and so the price action, those swings between the swing lows and the entry levels are quite high as well. So absolutely, wide stops, is something that we should all come to appreciate and understand, because certainly having stops further away, it's something that you really need to take into account. So I think from that point of view, the market is really, at the end of the day, we're just getting feedback from the market. It's telling us, look, there's a lot of volatility in the market at this particular point in time. Big swings up, big swings down. And it was interesting, I read an article the other day, you might remember, from way back at the end of August, with the significant volatility that we had then, and particularly when you're dealing with instruments like ETFs, as an example, which are a collection of, a representation of stocks that represent an index, that the volatility there being so extreme, very difficult to get an accurate pricing on not just indices, but think about those ETFs that mirror indices, and not being able to come up with valid pricing. And so that's where using hard stops in the market can really work against you, and that's sort of, that's something that hopefully that we've seen the value of using soft stops. But again, not everyone's comfortable using soft stops, so you really need to be, I guess from that point of view, consistent with what you're using in the markets, hard stops versus soft stops, and there are advantages, but also the disadvantages, of either methodology of planning your exits. So certainly wide stops, but again, you just need to adjust your position sizing accordingly. All right, folks, if there's nothing else, I'll leave you with it. Fingers crossed for a bounce in the Australian market this week. The Australian portfolio, again, really interesting, has held up very well, considering where the index is and the trouble it's had over the last 9 months. A lot of those stocks, again, that are holding up are in those stocks that are been performing, part of sectors that have outperformed for a period of time. So certainly well worth thinking about doing some sector analysis and looking at stocks in those particular sectors as well. All right, folks, thanks for tuning in today. We'll catch up with you on the macro session on Friday, but at the same time next week. All right, bye for now.